All right, today we're going to talk about everyone's favorite stock, Tesla. Whether you love it or love to hate it, it is always in the news, whether it's for its massive year-to-date gains, S&P 500 inclusion, or being shorted. One thing's for sure, if you've been able to hold on to this stock this past year, you have done quite well. Looking at the chart here on Yahoo Finance, nearly 700% year to date up, which is just insane. So today I want to talk about this from the perspective of a index investor. So with the inclusion of Tesla in the S&P 500, I've seen some articles come out with concern that, this is going to create, volatility based on Tesla's history of a roller coaster of a stock, and its massive growth has been, one of the quickest to be hit the inclusion requirements for the S&P 500. So just to review what's required for a company to be added to the S&P 500. Now these are just the requirements, the bare minimum that I've got highlighted here. It must be a U.S. company. The market cap must be 5.3 billion or more. The public float must consist of at least 50% of outstanding shares. Must have positive reported earnings in the most recent quarter as well as over the four most recent quarters. And just to give you an idea of the market cap weight of Tesla currently, it's about 1.5, 1.6%. So there's been some real concern over how this is going to negatively impact the S&P, or for those that index as their primary source of investing, how is this going to play out for someone that may not like some added volatility, or is that really even, should that be a concern? Here we have a clip of Jim Cramer on CNBC talking a little bit about this and just the sheer power the top holdings of the S&P have due to their market cap.
How about that? I guess, but we've talked about, though, the influence of these mega cap companies on the index itself.
Yeah.
For the longest time, I always drew the distinction between the Dow and the S&P, in part because one's a price-weighted index, one's market-weighted. But the fact is that Apple and Alphabet and Amazon and Microsoft, and then you get down a little bit, all right, Facebook and then Tesla, they have enormous impact on the movement of the index itself. It's only, 6, 7 companies.
And that's why.
Okay, so this is not the only place we're hearing that here. There's been a few news articles have surfaced. Here's one from Barron's. Tesla stock is now part of the S&P 500, and the index will never be the same. Never be the same. Okay. You have a highlighted part here. It says the addition reshapes the S&P 500 in many ways, and Tesla stock could push the entire index down in the coming days. So I think that's part of they're maybe concerned about the run-up. Everyone wants to get a piece of the stock before anyone that's indexing is basically forced into owning a small part of Tesla in their portfolio. And they say here, for every $11 Tesla moves, the S&P will move 1 point. Okay. Here we have another article. Will Tesla destabilize the S&P 500? In the last year, Tesla has averaged a one-day up or down move of 4.1%, about 4 times the S&P 500's long-term standard deviation. Okay, in the past year, Tesla has averaged a one-day up or down move of 4.1%, about 4 times the S&P's long-term standard deviation for daily return. So it's certainly a more volatile stock. So, this is more what I'm aligning with here. there should be very little concern about this. Tesla, even though it's suddenly up on the list of a major index now, still is only about 1.6% weighting in that entire index. So here we have another article from CNBC about passive investing, stating passive investing automatically tracking indexes now controls nearly half of the US stock market. So this is big, this is huge. So this would be a point in favor of, the S&P 500 not being hugely affected by the inclusion of Tesla. Especially, it's only going to be 1.6% or so. With its current market cap, it's not going to move the whole index in a significant way. And another point here is you have investors, which index investors that make up a huge part of the stock market investors, just not caring about pricing. They are buying the whole index, and there's going to be less susceptible to the individual active investment funds or active traders. You have a large pool of investors that are going to be pouring into the company in a passive way. So final point here, just to kind of hammer home that as a index investor, you probably shouldn't be too concerned of whether Tesla is included or not. Like I said, sure, the top 5, 10 holdings can certainly collectively swing the value and the price and direction of the S&P 500, but just Tesla, it's going to be a blip on the radar.
I read somewhere, Vincent, if Tesla goes to zero, the S&P only loses like a couple percent. Is that true?
Yeah, I think based on today's price, it should be around 1.5 to 2% of the index. So,
Okay.
But it's still, it still would become, maybe the 4th or the 5th largest holding.
Okay, well, that's all I've got for you guys today. Thanks for listening. Feel free to comment if you've got a differing opinion. If you've been a holder of Tesla, congratulations, you've made out extremely well. If you are primarily an index fund investor, I would say you've got nothing to worry about. This is just going to be another chapter in the S&P 500's self-cleaning passive index life cycle.